I'm Raymond Guns with Dope CFO, and to my right here is Andrew Hunzicker, the founder of Dope CFO. So today we're going to break down 280E impacts and solutions, what you actually need to know, just in the sense of like, we're going to make it brass tacks. I know you get a lot of legal jargon and tax jargon, but we're just going to make it brass tacks, what 280E actually means for cannabis business operators. And then we'll follow that up with startups. So we'll start with more of the mature operating kind of things to consider, and then we'll finish the presentation with startups, what you need to know, what you need to think through in order to be successful when starting a facility. Let me just break down a little bit. Trying to get to the next slide here. Give me a second. There we go. So here's what we'll be covering in this presentation. Just layman's terms, explanation of 280E and its impacts, direct labor versus indirect labor and material. Essentially, what is COGS, what is not COGS? That's the crux of 280E. Indirectly costs commonly allocated to COGS, indirect costs that are never allowed to be allocated to COGS, and then wrap up with how to beat 280E, kind of tongue in cheek, what you guys need to consider. Again, at a high level, we're Dope CFO, #1 cannabis and CBD accounting and tax network in the US right now. This is all we do. This is why we're here. Andrew, I'll let you chat a little bit about yourself. You want to introduce yourself real quick?
Yeah, hey there. I'm Andrew Hunzicker. I'm CPA as well, founder of Dope CFO. Excited to jump in, and there are a lot of misconceptions around the space, so we'll dig into that as well. I do speak all over the U.S., including I lead the AICPA cannabis conference every year. I think I'm speaking 4 times in August this year, as well as teaching national firms. So Dope CFO is actually the national leader at this point in the space. We have over 500 Dope CFOs in all 50 states. And so we're leading the space and proud of that. The bigger national accounting firms have come in late to the game. And at first, for years, I think a lot of they wouldn't even touch the space. They are now all in, but they might have 20, 30 people in their cannabis division, not 500. So it's fun for us to be able to lead the space and compete with the big players.
For sure. And quick background, but the one that always stands out with me for Andrew is he's been in the cannabis space since 2015, out in Oregon, out west, where it's all been started. He cut his teeth, got his boots wet with a large MSO in Oregon. So we learned from doing, we learned from experience. We just didn't just enter this as another industry. It's the only industry Dope CFO does. And again, here's some shots from the AICPA. We'll be out there kind of again in Denver this year. Quick background on me. I work for Dope CFO. Similar to Andrew, I'm a CPA with a public accounting background, Fortune 100 company experience. So did all the internal controls, dealt with SOX, and kind of hopefully where all these MSOs are driving towards, which is being publicly traded. I've been around cannabis my whole life, been around family and friends grows since, I was 16 or so. I built a CPA firm that only does cannabis. I speak about cannabis. I'll be in Virginia at the end of this month, and then Oklahoma City in a bit. And I like to help people. So anything I can do to mentor startups in this space or just establish companies to get things right. Because I just really care about the cannabis culture.
One thing, Ray, I just was going to add to that. So about startups, there are many, many startups in the space. I have a very long background in startups of 20 years, and that is actually the specialty of Dope CFO. A lot of startups don't realize that, I just need to focus on growing pot and get my facility up or get my license. Accounting and tax is crucial from day one, even pre-revenue, and we can help with anything from entity structure questions to funding structures to pitch decks, cap tables, financial models, all those things, controls, corporate governance as well. So yeah, just remember that is a very important topic.
For sure. And obviously, as we move west, new states are coming in online, but even within states, just new companies are coming online. So we know that we have a unique situation with cannabis, similar to tech, a few years ago, where it's a startup industry. So we're knowledgeable in that area. Alrighty, let's get into the brass tacks, the fun part about it. So 280E explained in layman's terms. I'm just right out of the gate. No deductions allowed. It just is what it is. So the federal tax code dictates what cannabis operators can deduct. that's 280E. It's essentially nothing, no deductions, no credits. It's just is what it is. That's the beauty of this industry. It's highly regulated, so it has barriers to entry. Essentially, companies that deal with THC products, which is Schedule 1 to generate revenue, their only way to lower their taxable income is COGS, or cost of goods sold. So you're going to hear that acronym brought up a lot. If you hear us speaking in COGS, it means cost of goods sold, sold being the key word there. So normal businesses, they don't have to deal with 280E, so they can pretty much deduct anything that they need to do the business. A lot of selling, SG&A costs that are normally deductible. But if you're a cannabis company and you're subject to 280E, direct costs attributed to the production of the goods sold in a company are the only things that you can use to deduct your taxable income. Again, we're going to keep breaking this down into more layman's term as we go to make it simpler to understand. But
one thing I would add on that as well, and this is a mistake many people make. They sometimes think a cost can go straight to cost of goods sold, and it can never go straight to cost of goods sold. Cost of goods sold is the result of inventory selling. So in the tax code, even though no deductions or credits are allowed, we can book up inventory. And when that inventory is sold, it will go to cost of goods sold. So if you have a farm and you're growing plants out there for 8 months and you haven't sold anything yet, we can put those costs into inventory via cost accounting, but we can't take it straight to cost of goods sold.
And that, I mean, as cannabis growers know, in the last year, it's sometimes we overproduce. And so until you sell that product, you do not have COGS. So just be mindful of that. It does happen. Impacts. So that's what it is, 280E. But what is it? How does it impact the cannabis business owners? So just, again, we're trying to keep this as high a level so the business owners can understand, instead of trying to memorize these like laws, just understand how 280E works. COGS have become extremely important for cash flow and tax purposes, because if all of your cash is going to pay taxes, it's going to lower your cash flow. So if we actually do the cost accounting correctly, where we increase COGS, we will have more cash available for the business. So unofficial goal of your accountant is to get as many indirect costs compliantly and correctly allocated to COGS as possible. If they're not focused on that, they don't know what they're doing for the cannabis industry. Legally, this can only be done via cost accounting. So you will have accountants that'll come in and try to just put COGS costs into COGS, which is what Andrew said. At the end of the year, they'll say, hey, let's just put everything in cost of goods sold. It's like, no, you cannot do that. Cost accounting is this process we go through of calculations and accounting that flows it in. So it has to be done doing cost accounting. Cost accounting must be done throughout the year. Again, like this is just IRC tax code. You can't wait until the end of the year and put all of your costs into COGS. Every quarter, when you're filing your quarterly tax return, you need to be doing this. So at a minimum, absolute minimum, it's quarterly. We push for monthly, because if we do it monthly, the quarter ends just another month end, and we have a lot of practice doing it. So it needs to be done throughout the year. Monthly is best practice, quarterly at a minimum. And you must have sales to have cost of goods sold. Unfortunately, that's something we need to like explain to people. It's like some people overgrow, or they just don't move their product timely. They're not turning over inventory the way they should. So you must have sales. I threw this one in here just tongue in cheek, just based on my last few conversations, but how to know your tax preparer accountant does not know shit about cannabis, because we deal with this all the time, and it has nothing to do again about them as a CPA or an accountant. It's just cannabis is nuanced, just like a construction industry is nuanced. The real estate industry is nuanced. So the big beverage industry is nuanced. So I live in Milwaukee, so I use beer a lot in my analogies. So no friends are just getting together and like, we both enjoy beer. Let's just start up a beer company. Like that doesn't happen, but for some reason that happens in cannabis. And so they just pick any old accountant because they just did. So high level stuff. And this is for the operators who already have an accountant, or they're thinking about selecting an accountant or a tax preparer. So if they speak in terms of 280E deductions, you know they don't really know what they're talking about, because right out of the gate, there's no 280E deductions. 280E is just a tax law that means we have to do cost accounting. So nothing's deductible under 280E or 280E deductions. That's not the correct frame of thought. So if your tax person is talking about that, just know that they don't really know cannabis taxes. They may know taxes really well, and that's why you selected them, because they helped construction companies or real estate companies or manufacturing companies, but they don't really know cannabis. And then moving on to your accountant, just because you were successful in another company with this accountant does not mean that accountant will make you successful in cannabis. So if they're not talking about monthly or quarterly cycle counts, you know your accountant or your CFO doesn't really know what is going on. If your accountant or CFO is not commonly talking about cost accounting and speaking about it regularly, like this is why we're doing this process at the end of the month. This is why we do this process at the end of the quarter. You know you're missing out on tax deductions, and your tax accountant, your tax preparer or accountant are not giving you the best opportunity to, have a successful company. So again, 280E deductions, cycle counts, cost accounting. That's what we need to be cognizant of.
One
fire
thing
away, Andrew.
I was going to add there. So cycle counts, you may not know. So that is actually inventory count. So so if you're on the farm, you need to be counting your plants every single month end and documenting it. If you're in a dispensary, you need to be counting weekly. So with a dispensary, a cycle count that means we may not be counting the entire inventory every week, but we're counting 10% of it every week. And we cycle it through. The farm we're going to do definitely every month. And we need that information to support both the books and the tax return. And then we can do our cost accounting, which is a complex month-end process where we move costs around. So like if your bookkeeper records rent expense to rent, that's how a bookkeeper that knows nothing about cost accounting would do it. It's in rent, but then at month end, we're going to go into rent and say, we're going to take a part of that rent and we're going to put it over there on work in process inventory. So the grower, that's your plants. Then we're going to take a part of that rent and put it on finished goods. So the grower, that's your packaged flour ready to go. And then we're going to take part of that rent and put it into cost of goods sold. And that's the amount of the flour that was sold to the dispensary. And then we're going to leave part of rent in rent. And so it's a complicated process. You need tools, knowledge, and work papers. And that's kind of where Dope CFO comes in, because most people in the industry are simply not doing this.
Yep. And the big takeaway I want you guys to know with this slide is like Andrew just explained, cannabis accountants do certain things to do the accounting correct for cannabis companies. Real estate accountants do certain things correct at the end of the month to make sure they keep the books correctly for real estate companies. It's the same with construction. There's specific accounting that we just need to be nuanced on. So construction companies, it would be construction in progress accounting. How are we recognizing revenue? How far along in the construction site are we, as a proportion against cost? Like it can get very granular. Same with lease accounting. It's very nuanced. There's codes around it that you just need to know and apply. Cannabis is no different. So just as a business owner, know that you want a specialist. If you were opening a real estate company, all things equal, you'd pick the accountant who specializes in real estate. But okay, let's get into the brass tacks. So direct costs for indirect costs. And this is where we're going to get a little bit granular, but this is really just to show you how detailed the cost accounting can be for your cannabis company. Which I guess just shameless shout out, just a plug of why you want to work with cannabis accounting specialists. Regardless if it's us, I just want you to work with a specialist because I love the cannabis industry. I want it to go forward compliantly and indefinitely. So COGS versus indirect costs. Essentially, that's how I think through it as an accountant. CPAs, we have direct costs, we have indirect costs. COGS is essentially direct costs plus allocated indirect. So just at a high level, just to help these business owners understand, when your accountant starts talking to you, they're talking in what is direct costs, what is indirect costs. So direct costs, expenses that go directly into producing goods or providing services. So that's going to be your direct labor at the cultivation facility, your direct labor at the extraction facility, your direct material used to grow the flower, your direct material used to extract the flower, direct overhead. If you're paying rent on a piece of land to grow outside or paying rent on a building to grow inside, that's, would be overhead. Same with utilities. That's direct costs. It's pretty standard. People know that, oh, I need to incur costs to generate a good or service. Indirect costs, that's your selling, general, and administrative expenses that just keep you operational. So rent, utilities, not really related to anything specific to the grow. Salaries of sales team, salaries of administrative team, office expenses. This is just to keep you up and going. So direct labor versus indirect labor. Essentially, what goes directly into my COGS, via the labor, it's part of it, or what do I need to allocate at the end of the month? So just from a business owner, you just need to understand that your COGS is made up of direct labor and then allocated indirect labor, which that's what the accountant worries about. So just don't get too granular, just understand it, business owner, and then we're good to go. Direct labor, labor used to produce goods or provide service. In cannabis industry, that's going to be our cultivation team, lab extraction team, finished product packaging team, like to actually like put it all together. Chief operational officer, if that's truly all that they do, that's like your direct labor. It makes sense. Like you can picture a grow facility with bud tenders and cultivators all growing. You can picture a lab with all the people doing the lab extraction. Indirect labor, this is where it gets kind of fun. Labor used only to keep operations going. And this is where like, it's just the cost of doing business, accountants, lawyers, professional consulting fees. That's not directly used in the production of the product. So it doesn't go there. It goes into indirect labor, essentially not cost of goods sold. CEO, CFO, CMO, them high C-level execs that aren't really involved in the cultivation or extraction. They're busy working on financing, working on marketing. It's indirect labor. Sales, indirect, admin team, indirect, so on and so forth.
And one point I might make on that too, on as we talk about, because it is a little bit confusing. So when we're looking at costs at the end of the month to put into the product, to put on that plant, think of it this way. You're going to put all of the direct materials, that might be soil and water, into the plant. We're also going to put all of the direct labor into the plant, 100% of it. So if Sally's watering plants all day long, 100% of her labor is going into that. But we're also putting part of the indirect costs into the plant, and part of the indirect costs we're not putting that. And so that's where the tax code gives us specific indirect costs, like selling expenses we cannot put on the plant. But say the CFO is out there working in the field 10% of his time, I might actually put 10% of the CFO salary onto the plant. So for indirect costs, we have to look at them one by one and say, okay, like rent's a good example, is an indirect cost, but we're going to put part of rent into the plant and part of rent we're not going to put into inventory or cost of goods sold. And so that's a good way to think of it. At the end of the day, your plant is going to contain direct materials, direct labor, and some indirect costs. And some indirect costs will not go into the plant. But yes, it's complicated, and we got to look at cost by cost.
Yep. And so that's why don't worry about it so much if you're the business owner. Just worry about finding the right accountant. If you find the right accountant and CFO, they'll do all of this. That's part of their job. That's why they're there. But if you find somebody who doesn't know cannabis, they're not going to do any of this, because why would they? They don't know how to do this. They haven't had the experience yet. So direct material, just like Andrew said, some direct material goes right into the plants. We know it. It's logical. Soil, nutrients, cultivation process supplies, lab extraction supplies. Some indirect material definitely doesn't go into the plant. But then here's where we get to, like, this is what your CFO should be doing at the end of every month, minimum every quarter. And if they're not talking to you about this, business owner, they don't really know what they're doing. It nothing against them as their character or their ethics. It's just they didn't take the time to learn the nuances of cannabis accounting like who would. So indirect costs. So some of these indirect costs that we were talking about up above, they can be allocated to COGS via a very specific cost accounting calculation that we do, which is line item by line item, because rent, how we calculate the allocation, is going to be different than indirect labor or utilities. So we have to do these specific calculations of rent and utilities to allocate it to direct costs. And essentially just think of like an indoor grow. It's $100K per month for rent. 90% of it is used for cultivation. So we will take that 90% that's used for cultivation, multiply it by the $100K rent expense, and then $90,000 will then be allocated to cost of goods sold. And just to keep it at a very simple understanding level, that's what's happening. Which is why we need to talk every month. We need to talk every quarter, like, hey, where is all of these expenses? So these are commonly allocated to COGS, rent, utilities, repairs and maintenance. Indirect labor, that is actually allocated to direct labor because they're working on the production or manufacturing of it. And that's kind of what it is over here. So officers' salaries allocable to manufacturing and grow process. Think more of the mom and pop type shops where the one of the founders is also the head grower, something like that. So even though he's paid an officer salary, 90% of his time is operations, manufacturing, and production. So we could allocate 95% of that officer's salaries, which in many cases is quite large, to the cost of goods sold, thus lowering their tax burden. It's the same with administrative salaries. There's some fairly high salaries and depreciation costs that if you're not capturing at the end of every month and at a minimum every quarter and allocating correctly to COGS, you're missing out on this and you're essentially paying more in tax than you should, which again, kind of brings me back to that tax accountant or tax preparer or CFO for that matter. What do we do? What do you know about 280E? How are we doing cycle counts? How are we ensure cost accounting is compliant? Because I don't want to get audited and just lose all my profits. Indirect costs never allowed to be allocated. This one is rare, but again, this is like a huge red flag of just walk away. If your CFO or your tax person or your accountant is saying like, let's put marketing or advertising or selling expenses into COGS, like just walk away, they're going to get you in trouble. Interest, R&D, income taxes, all of this stuff, it's not allocatable to the production or manufacturing of the product. So thus, not allowed to go into inventory. It's not an inventoriable cost. So again, how to address 280E, just master it. Don't try to beat it. So like the people that try to beat 280E are the people that get with a lawyer, and that's it. It's like, obviously you and a lawyer think you can beat 280E, but you just can't, because 280E it's an accounting tax implication. Lawyers aren't going to know the nuanced accounting and tax implications of a 280E tax law. So it doesn't really even make sense to me that they always start with the lawyer in their hopes of working around 280E. Just stop it. It's not going to work. The IRS is wise to it, and even investors now are wise to it. So if you have a complex entity structure, which like we'll get to that on the next slide or the next presentation, they know what's happening. So they know that this isn't a sustainable long-term business because you're already trying to get cute with 280E. So that's not like attractive to investors. So master it. What you master it by getting a CFO or a team that actually knows how to work with it, which is cost accounting. Again, apply consistent methodology for their cost of goods sold calculation. This is stuff that your CFO will be implementing because you're going to get audited. You have like a 20 times more chance of being audited than your friend who owns a other small business. So you're most likely going to get audited. So you need to have a consistent methodology for how we calculate this and allocate it. And then we need to document it and retain it. So that kind of comes into having your accounting. Make sure your accounting ties out to your financials every month. Because again, that's what we're doing at the month end is we are closing the financial statements with all the correct cost accounting worked in. Monthly inventory counts. More employees needed than normal. Just another fun thing of being in cannabis. Like it takes a team to do this. It's not a hobby type industry. It's you're either all in or you're not, or you're going to lose your lunch. So monthly cycle counts, you need to do it. You're going to have to pay somebody to do it. Just get used to it. Use of flower calendar. That's something that your CFO will do. Again, like Andrew was saying, we need to put all these costs into the flowers. And then we need to know where the flower is in its life cycle. Is it a 30-day small little clone, or is it a day 90? Like this one's looking pretty cool. This might be on the cover of High Times. They have different values and costs. So that's why we use a flower calendar. Monthly cost accounting adjustments kind of ties back to the rock solid accounting. It needs to happen monthly. It's best practice because then the quarter end is just another quarter end. You don't need to panic. So do that monthly. You need to do it compliantly to move from indirect costs into COGS. Knowledgeable cannabis accountant is how you're going to do all this to address 280E. Audit case studies, just quick on these. So Harborside, they lost the case. Champs, they won the case. So you can kind of see just plain as day why Harborside lost when they try to get cute with 280E and how Champs was able to work with 280E to pay the right amount of taxes and stay in business. So Harborside, they had no separate operating agreement between their entities, even though they were trying to claim they were, separate entities. Champs had separate operating agreements from the beginning by entity. Pretty basic stuff. No separate profit motive. Like, yes, you have a merch business, but it's still all related to the same. Champs, they had separate profit motives. One was a dispo, one was health. They were different. No separate books. Again, why you need an accountant or CFO that really knows what they're doing, because it's complex. You're going to have separate books if you want to. So Champs, they had separate books. Harborside, missing key documents. Again, just poor document retention, poor accounting, poor bookkeeping. champs retain documentation. I was an auditor for 8 years. I can tell you, like from experience, if they've retained the documentation, like we'll let most things slide. Like if you can show you made an effort and it was just like complex and you made a mistake, hey, it happens. But if you didn't retain any of your calculations, retain any of your paperwork, like we're going to skewer you. It just is what it is. That being said, kind of any questions before we move on to the next one? I know we're kind of coming up on the 30-minute mark, Andrew. So kind of any final thoughts before you have to bounce out?
I think that's good. Is the next one startup?
Yeah, the next one is startup. So give me 1 second. I can pop that one up here shortly. Let me share my screen for that one. Cool. Let me know when you guys can see my screen.
I can see your screen.
So,
Perfect. So then this one, actually I can bring this way back to the beginning. So we'll go, so this one.
Ray, I'll let you do this one and then we'll talk after. So I'll let you do that one because I do got to jump. Oh yeah, it is after 7:30.
Sounds good. Be well, Andrew. Thanks for joining us.
That was awesome. And yeah, let's I took some notes too, and we'll contact after this later.
For sure, for sure.
All right,
we'll talk to you later.
Great to meet everybody, and we'll see you soon. Bye.
Nice to meet you, Andrew.
Cool. So another topic we heard that the MICIA member base wanted to learn from, if they had an accountant on presenting, what would they want to learn? One of them was just, if you're starting up a facility or a cannabis company for that matter, what do you need to know? And kind of to make sure you get off on the right foot. Again, I care about the cannabis industry. Andrew cares about the cannabis industry. Dope CFO cares. That's why we're here. So we want everybody to succeed. And we know it's just a matter of having the right knowledge and the right information, the right resources. And you should be able to, do what you want to do to be successful the way you want to be successful in cannabis. So switching from 280E and just putting more on the mindset of like, we're putting a team together, we're going to start a cannabis business, or we have a team and we already have a license, we have real estate. Now we just need funding to stand up the cannabis company. We're in more of that startup phase mindset. So that's what this presentation is for. And even if you're already up and operating, if you're looking to expand or go into another state, all of this is applicable to you. So the title of this one, I just threw on there, license, real estate, and funding, what you actually need to know. Because again, a lot of BS out there in cannabis and a lot of jargon, consultative jargon, legal jargon, tax jargon. I just want to make it easiest for you as the business owners. I'm a business owner myself, so I like it when we keep it understandable. So those are the big three. So do you have your license? Are you pre-qualified? Where are you at in your license process? You have it? Cool. Or you're on the process. Real estate. Do you have it picked out? Do you own it? Is it going to be on your license? That's the next kind of big piece that also kind of happens simultaneous with license. Funding, if you have it up front, all the better. If not, most likely it helps to have a license, either like outright or pre-qualified, or you own the real estate outright or are in the works. And ideally you have them both. It'll make it easier to get funding. But for Dope CFO, because we service the cannabis industry, that's usually how we vet anybody that comes to us, just at a really high level back of napkin. Like, where are you at in your licensing process? Where are you at with real estate? Where are you at with funding? Because you need to start somewhere. I would like to see them with ideally 2 out of the 3. If they got a license and they got money, they just need to find a location. We can help. If they have real estate, they have funding, they just need a license. That's a little harder because you're kind of locked into the real estate, but hey, they got 2 out of the 3. License and real estate, that's my bread and butter, where it's like, all right, now you just need to get funding to start up your company. But those are the big 3. I'm not going to harp on them anymore, but if you're a business owner and you're thinking through your business, where to get started, license, real estate, funding. Once you get that locked down, then we can worry about operations. Okay. What will we be covering in this presentation? What's the best entity structure? This is a super common question we get asked all the time, especially in cannabis being a startup industry. Legal documents for entity types. Put that one in there, honestly, just to kind of scare you business owners into understanding how much legal documents goes into when you just give your Uncle Larry 10% of the company, or you want to just structure a deal for real estate for equity of the company. Like all of this requires legal documents because accounting comes after the legal documents. So that's why I'm kind of going to touch on that. Investor documents, another one of those things where people just don't even think through, if they structure their company as a corporation versus an LLC, how much more documents they need to track on a very monthly and quarterly basis. We're going to wrap up with your 5 keys to raising capital. Again, it's cannabis. It's an expensive game to play. And for whatever reason, people think it's a hobby industry. They get eaten right away pretty quickly, but the ones that are legit, they know they need to raise capital. Just to stand up a grow, you're looking at easily 5 to 10 million to stand up a dispensary, easily 5 to 10 million. You can get away with slightly less depending on what your situation is with the real estate and the license and the funding, and I guess the pre-use of the building or location, but it's expensive. It's a millionaire's game. So you need to raise capital or you need to come flush. Who we are, I'm not going to go through this stuff again. You know who me and Andrew are. We'll get right into the brass tacks, the fun stuff. What's the best entity structure? We get asked this all the time. Lawyers will just start talking. Somebody who knows what they're talking about, we'll just say it depends. Because there's many things that will affect how we want to structure the entity. It's not, as the lawyers say, just make a bunch of entities to get around 280E. Again, the IRS is wise to that, and your investors are wise to that. They don't want to invest in cute companies. They want to invest in sustainable companies. So what's the best entity structure? Well, it depends on, do you want asset protection or tax minimization? They're 2 different goals. Super wealthy individual, silent investor, they only want to protect their assets, essentially slightly grow their wealth. If you're a young buck, you're getting into the industry, you want to make your first million, you're probably going to be more worried about tax minimization. They're just 2 different types of goals. Is capital being raised and what is the amount? Because some entities, depending on the state, it is a little less capital intensive to stand up a company. Like we work with really kind of, very medium to large companies. But honestly, if it's a small state like Michigan, I know you can get a license for, I think the cheapest license is like $4K. So you can essentially start a company, but not need to raise capital. That will affect how you structure it. If you're starting a company and you know for sure you need to raise capital, that will affect how you structure it. How many owners are there versus how many investors, that'll affect it. Minority interests, current entity tax rates, so on and so forth. The big takeaway, again, like I always just want the business owners to understand more so than memorize. So the big thing to understand here is just there's many legal issues around raising capital, forming entities, setting up tax plans or tax strategies, as we call them. So at a minimum, make sure you're using a corporate attorney and ideally a tax attorney, or at least a tax cannabis professional, because they'll set you up right. Common entity types. This is nothing new for the average business owner. C Corps. It's easier for raising capital. That's why it's very popular. That's why they do it. Corp, essentially the tax rate's capped at 21%, so on and so forth. For us in cannabis, there's more costs to set up and maintain. So that's just what you need to know about the C Corps. That's the con. Obviously, double taxation is common throughout any industry. LLCs. They're easy to set up. They're pretty standard, easy to maintain. But all that ease of setting up and ease of maintenance comes with some cons. Essentially, it's harder to raise capital because investors want that C Corp structure where it's just like they're investing in an entity and it's a little bit more protected. Whereas here, the IRS can leak to investor personal tax returns. It's easier to pierce the veil, as we say, with an LLC. Which in my experience is usually just because they are just smaller entities, commingling funds, doing things kind of back of napkin handshake style, which as an accountant, like we know that that just doesn't work. So that's the pros and cons to LLCs. Multi-entity structure. Most people at first, everybody gets told to do this because usually they start with the lawyers, and so the lawyers are like, well, how do I get paid? Multi-entity structure. Start with a holdings company, then a real estate company, then a person management company, and then maybe we'll make a cannabis company. Sometimes it works, and there is very logical reasons to do that, to create some degrees of separation from certain entities. So for sure that there is justification for multi-entity structures. In my experience, starting out, most groups of cannabis business founders, they're just too small to really justify the cost and the cost to set it up and the cost to maintain multi-entity structures. So they'll get tricked into it by their lawyers, and then they'll realize their bookkeeper can't really do it. And then they're just kind of stuck in this thing. Like, I have 3 entities for one business entity, or one business entity. Because that's really what it is. So sometimes it works, sometimes it doesn't. Again, it depends. Legal documents for every entity structure. This is one I had to add, just for the sheer amount of times business owners come to me and say, yeah, this is John Doe. He's my business partner. He owns 50% of the company. And then we get the articles of organization, and he's not nowhere to be seen. And so it's like, what happened there? And like, oh, I started the company by myself, but then he came on right away, so he's got sweat equity. It's like, no. Legal paperwork happens, and then accounting paperwork happens. I'm not going to add John Doe to the cap table just because you think he did sweat equity. It doesn't work that way. There's legal documents, tons and tons of legal documents. I do love lawyers, but I do like to just kind of poke fun at them, tongue in cheek, just because they're the ones that always get the action right from the business owners. So the business owners are going to go to the lawyer and be like, hey, I need to start a C Corp. Luckily, the lawyer will tell them, like, all right, there's lots of stuff we need to start doing. Legal documents, articles of incorporation, bylaws, board minutes, stock certificates, shareholder and employee mint agreements. These are formal documents that do need to be documented, and you got to pay money to a lawyer to do it, is what it is. Ongoing, that's the beauty too, is everybody thinks they start a company and then it's, hey, the legal paperwork's done. No, it's not. You need to have shareholder meetings minutes. You need to document that and retain it. Board minutes, document it, retain it. Cap table. You will have investors that come and go. You will have distributions and contributions. So this gets maintained every month as best practice. At a minimum, it needs to be maintained every quarter. It just is what it is. LLCs, well, again, pretty easy to start. Articles of organization, operating agreement. But again, ongoing, you do need to have your annual report. Like, you need your financial statements, everything tied out. Reasonable comp support. That's when I put on there, just because I'll see a lot of LLCs just running things through the business, which, I mean, for better, for worse, like, I get it, makes sense. Companies pay for vehicles all the time. Companies pay for housing all the time in specific cities that they need to be in strategically. I come from a Fortune 100 company. Our CEOs use jets and helicopters. So it's like, I get it. You get to director, you get a car. You get to VP, you get an apartment in the city of your choosing. But we need to have that be reasonable, and we need to document it and have it all be logical, because it's not what they know, it's what they can prove. Investor documents, if raising capital. And we say that because some people, they're not raising capital. They just need to get this company going, in which case, cool, let's just get it going. But in our experience, many people are. So if you're like many cannabis owners and you're trying to raise capitals, you do need corporate attorney. That's another thing too. Most people get it at this point, for sure. But I would say 4 to 3 years ago, when I was just really getting into cannabis, like, it was still pretty loose, how they would raise capital and what documents would be signed. Usually money would just, hundreds of thousands of dollars would go into a bank account, hundreds of thousands of dollars would come out of a bank account. They may get around to signing that agreement, hopefully before the entity either takes off or folds, because that's when it gets messy. So essentially, many legal documents to maintain with any of these structures, whether it's a loan or like a debt loan or a equity agreement. So legal docs, your equity or debt term sheet, that's just the basic. You'll be amazed how many companies don't even do that. If you're a C Corp and you have investors, there's also investor rights agreements, plus a plethora of other legal document you need to maintain. You got to track everything at its inception. So again, that's where we come in, is we'll go into a company's, essentially financial closet and try to organize it. And we find out there's none of this stuff is signed or created. And it's like, well, you already have these on the books because you just pushed it in there. Now we need to figure this out. So again, just like there is to form a C Corp, to maintain a C Corp, and to have investors invest in your C Corp, lots of investor documents that need to happen in the beginning, lots of investor documents that happen every quarter and month. LLCs, no different. Whether you're raising debt on a loan or you're raising money via giving away equity, there's term sheets involved. So whether you're giving somebody 10% for this much, 10% equity for this much cash, that needs to be documented. You're taking someone's cash with the hopes of paying them back in an allotted time frame on an allotted interest rate, that's a loan. That needs to be documented because, again, from the tax side, they're handled differently, and tax drives accounting, drives how we do everything. All right, the fun stuff. Still on time here. We got about 15 minutes. So 5 keys to raising capital. Yeah. What company founders need to know to maximize their chances of finding and closing capital in today's competitive environment. And I would say it's getting better every month. So we stand on the shoulders of giants in cannabis. We truly do. We complain about this industry a lot, but I can assure you this industry is much easier to operate in now than it was 5 years ago, and for sure 10 years ago. So we stand on the shoulders of giants. I just want to give a shout out to any of those people, legacy operators, longtime legit operators. This is where we're getting to now, where we can actually raise capital without having to give up equity. Woo! That's a big deal. Back in the day, you only were able to raise capital and raise funds by giving up equity in your company, which any business owner knows that's some of the most expensive things you can give up, or expensive value you can give up. So just keep that in mind. It's actually pretty awesome to be able to raise capital without giving up equity. Let's get into it. I'm going to provide these slides to Isaiah after this. So, I mean, he can pretty much share this with you guys. So don't worry about taking pictures of this slide or memorizing all these words on here. Just try to understand. You got me here right now explaining it to you from a cannabis CPA perspective. Just try to understand. And you can read all this stuff later. So the key to raising capital, rock solid world-class accounting. And that's literally pre-funding and after you're funded and you're operational. You still need to have accounting. You still need to have your pro formas dialed in and projected 4 or 5 years out. You still need to have a pitch deck that's very logical. So amass a skilled team with knowledge and experience to correctly set up your accounting and investor pitch deck. You're not going to, I can't believe how many times I've seen really solid teams put together a really solid pitch deck, and then we get to the pro forma and it's shit. And as an investor, yeah, you can have all the pretty slides you want in the team, and the team definitely does matter. But right behind the team is the accounting and the numbers and what is their actual ROI on this investment. So make sure you have a rock solid team that puts together your pitch deck in a logical way, or puts together your pro forma in a logical way where the pro forma can then flow into your pitch deck. And then also just the team aspect is, an investor is going to be more excited to invest in a company that has a CFO that knows what they're doing with a track record in cannabis, especially now because that's becoming the norm. Years ago, they would just get away with it. It's like, hey, we just have a team of professionals, which is great. You'll still get funded. But at this point, all things held consistent, they want a team with experience in cannabis, CBD or hemp, or whatever it is that we're trying to, whatever vertical it is that we're trying to get into. Well thought out capital and entity plan. Again, does the amount of capital needed make sense? Again, I could count on many times where they come to me with this random number that they want to raise. And then when I ask, like, why do they want to raise that? They say they only need about half of it, or they need twice as much. And it's like, well, all right, well, let's just decide exactly what we need. And the angle from this one is most people underestimate. So I've had it where they know they need to raise 5 million to get this facility built, but to land the real estate, they just need a quick 500K. And so they'll try to focus on 500K. And that's just not the way to do it. Like, trust me, you're probably underestimating the cost to build out a facility, and you're estimating the cost to grow the plants or the product or purchase the product to get it going. So just make sure the amount of capital makes sense and that it will cover the cost, because it's hard enough to raise money. So you don't want to have to go back and keep doing it. Concise, complete, realistic pitch deck. Again, to come back to the pitch deck, because a lot of what we do is raising capital on the front end. So just Google it, or it's supposed to be under 10 slides. It's supposed to cover these 5 key things. I know many people want to get cute with their pitch decks and either make them 20 slides or just not really get into the numbers. And those are the 2 biggest things is keep your pitch decks concise, because these investors look at many pitch decks every day, every week. Again, cannabis is ongoing all around us. And make it have real numbers. Like, you can get cute with your pitch deck with your team and your product and what makes you unique and your story and your location. But realistically, if the numbers don't make sense, investors not going to play. Like they don't invest off of emotion. They invest off of logic. So we need to have very logical numbers that are very easy to understand that makes sense. Market analysis, which is an accurate look at TAM, like understand your market, like very nuancedly and categorized. You know, yes, you're in this city, but you're in this specific vertical within this neighborhood, within this city, at this intersection with these various things around that real estate piece. Like that's the type of market analysis they want to see. This one, just to keep going, uses of capital statement is key. I just had a client we're working with where they didn't really think it was important. And then sure enough, as soon as they started floating around their investor friend group, it was the first thing the investor friend group said. Hey, I see what you're trying to do, like big picture, but once I give you this amount of funds, can you just itemize list what you're going to do exactly with that funds? The first 3 months or 3 cycles, that's key. I mean, we want to understand how quickly we're going to get paid back. So put together your uses of capital statement right away. Don't wait until an investor tells you, hey, we need to know an itemized list of like, if we give you 10 million, what are you going to spend that 10 million on in year 1, year 2, year 3? They want to know this because it should very much like you spend money, but then you start making money very quickly and the cash starts going up. So uses of capital raise statement, key piece of your pitch deck. Again, offer. What are you actually offering? You'd be amazed how many pitch decks don't actually have that. Traction. Again, license, real estate, funding. How much traction do you have? Sales, ideally. If you have sales, that's a pretty proven track record of like, all right, you were able to have an idea, raise the funds for it, stand it up, create a product that's sellable and sell it. That's a lot of traction. And again, yeah, obviously have a corporate attorney. Just review it to make sure you're not making any claims that can get you in trouble. We all want to be compliant marketers. Bulletproof financial model. This is your pro forma. This is what your CFO should be doing. Your cannabis accountant. This is what they should know how to do inside and out. That's going to be all of the financial statements: balance sheet, assets, liabilities, equity, revenues, expenses, net income, how that flows into there. Your cash flows, like cash is king in cannabis, more so than other industries. So we need to know where our cash is at all times. Another part of your financial model, which is usually gets overlooked, is your key assumptions tab. What's driving revenue doubling or tripling or quadrupling each year, or when you bring on new locations? Is it you have more distributors, you have more locations, your basket size per client is going up? What are your assumptions that drive your revenues, drive your expenses, drive your gross margins? Have these actually documented, similar to the uses of capital statements. Like, don't wait until they ask you what's driving revenue or gross margin expansion. Just know it. Access to investors and the roadshow plan. I've had to do this before. So some people come to you and they have a license, they got real estate. They just need us to put together the pro formas and the pitch deck with the mind of a cannabis accountant so that they can take it to their investors who they've already selected. But some people, they come to us and they have no idea who they're going to get the money from whatsoever. They have never even considered it. And so we usually don't do business with them because it's just like bad business acumen. It's like, you need to consider how you're going to get in front of these investors. And it could be as basic as it's going to be friends and family, initial round, and then I'll work towards accredited investors. Or it's going to be a wealthy network of business professionals based on my prior life as this business professional. Like, have something thought of. I mean, ideally it's an institution and you kind of know. Nowadays, I would say that's the best money to get, is just get straight debt so you don't have to give up equity. But have that thought out in advance. I've gotten to business owners many times, and they have pretty good solid business plans, but they just didn't think all the way through. If a bank's not going to give me the money, or a financial institution, who can I go to get the capital raise from? So just have that thought out in advance. Again, just try to understand that we used to only be able to do equity, capital raises, but now we can do debt capital raises. And that's becoming more and more common. And again, not to take anything away from like strategic investors, like that's a real thing. Cannabis, again, it's nuanced. So if you can get money from a company that is actually really nuanced in cannabis and can be a strategic investor for equity, that makes sense. But if it's just your rich Uncle Jimmy, it's like you could go just get that money from a bank and just pay the bank interest instead of having to pay Uncle Jimmy, you know, a sizable equity of your company as it expands. Other challenges to address in your plan for your pitch deck. This is what will really set you apart when you start to get in front of savvy cannabis investors, which the pool of savvy cannabis investors is growing. That's almost exclusively where you're going to get your money from, at least until federal legalization happens. So a savvy cannabis investor, like they want to know that you have inventory and cash control plans because they know cash is king. We're still trying to figure out the banking situation. There's a lot of solutions out there, but cash is still king, especially maintaining it because again, taxes are punitive. So you can make as much cash as you want, but if you're paying way too much in taxes, you're not going to have any cash at the end of the day to pay your investors. They know that inventory drives tax, so they want to know that you're on top of your inventory. It's just the way the professional cannabis investor thinks. So those are just some other challenges. Again, POS systems that are kind of old, your seed to sale tracking software, all of this stuff is getting better. But instead of trying to become like a business owner, a salesman, an operator, and also a software specialist, it's honestly, it's just better to just work with professionals that this is what they do. But that kind of wraps up the startups, things you need to know when opening a facility or opening up a cannabis company. Usually I'm doing this in front of a live audience, so just any questions. Isaiah, if you have anything you'd like me to flesh out, just let me know. But at a high level, the big thing, team, is just work with a professional that knows what they're doing because they can help you understand instead of just giving you legal jargon or tax jargon that you need to read through a bunch. Because it is complex. So similar to like if you were going to get into real estate, but if you're going to get into oil prospecting company, you'd probably work with an accountant who has worked with oil companies before. It's the same in cannabis. It's no different. So just try to make sure your team is solid because again, it's nuanced. But yeah, that's kind of it for my presentation. Isaiah, any questions or anything you'd like me to flesh out?
No, I don't have any particular questions. I think you captured all of the important topics, but for anybody beyond me who had questions and wanted to contact you further beyond this webinar, what would be the best ways to do that?
Yeah. So, I mean, if you're going to the summer conference, I'll be there next month, but just reach out. I'm a modern man, so I have my email. It's Raymond@dopecfo, dopecfo.com. I'm on LinkedIn as Raymond Guns. I'm on Facebook. And then obviously I'm a member of the MICIA. So if you just go into the member directory, search Dope CFO, you'll see my contact information, Andrew's contact information. So yeah, I'm a modern man. I'm out there just anywhere